is the U.S. economy heading into a recession?
Well, it may be. We're not.
The latest unemployment numbers show just how hard the economy has been hit by the coronavirus.
We think that U.S. growth is going to adjust to the downside. We do think there'll be a recession in the middle of 20.
Disrupting economic activity in a wide swath of affected countries. Shell markets across the world are experiencing intense volatility.
So hello guys, as you can see from the title, this video is going to be all about what can we predict from the current trend of the falling markets, and we'll try to analyze using a little bit of technical analysis of how markets may fall and where will they bottom out. So we'll be using a small thing called a support and resistance, and if you don't trust support and resistance, I've just to prove that it works out, I've done a trade. I'll just put a screenshot and then you can see how support and resistance work. I've just used a small, this is known as something called a falling wedge pattern by which you trade, and yeah, that is how it is. In this video, we'll be just seeing how Nifty reacted to 1991, which was, there were two reasons at that time. One is India pushed globalization, and there was a small scam called Harshad Mehta scam, in which basically increasing price of stocks. And then in 1998, there were also two things. One was dot-com bubble got burst, and then another thing during that time dot-com bubble got burst, and one more thing was Ketan Parikh scam, in which he used 10 stocks which were known as K10 stocks. So, and he did cyclic trading and tried to increase the price of it. So we'll be seeing how Nifty reacted to all those things, and everyone knows what happened in 2008, and we'll be comparing all that to 2020. Then we'll also be seeing the international markets. We'll be majorly seeing only DJI and UK 100. Then we'll be seeing how the market had reacted to 1919 crisis, which was Spanish flu. That is the most important thing. That is at the end of video. So I would like to everyone to stay until end of video to see how markets had reacted. Okay. So first, let us see how the Nifty reacted in 1991. I think you can. I'll just load up the Nifty chart and show you everything from 1991, 2008, 1998, and everything. Then we'll come back to this.
So now we have loaded up Nifty on tradingview.com, n.tradingview.com. So now let us see first Harshad Mehta scam. So we'll be using the basic pitch fan, and let us start right from 1991 and put it at the highest point. I think this should be fine. Let us see where the market has taken support. Now first it had tried to take support on the 50% at the 45-degree line, but it could not, so it broke it. It tried to go up, but we have a head and shoulder here, kind of head and shoulder, and then it again fell. And then it took finally support at the 50% line. So basically market fell from about a high of 1265 to low of 596 in a period of 400 days. So market fell by 52% in 400 days. And mind you, this is a pure financial crisis. Now let us see what happened at the Ketan Parikh scam. Put it here. This is where the Ketan Parikh scam had unfolded, and let us see how the market performed. Okay. So I have zoomed it properly so that we can clearly see what is going on here. So Ketan Parikh scam didn't have a lot of impact on the stock market because this is also the time when worldwide markets were also falling. So let us try and measure how much the markets fell and how much time did it take. So markets started falling in 2001, and they fell again to about 52% to 53% in 567 days. And mind you, this is also pure financial crisis. This is also when the dot-com boom bust. And yeah, this was overall worldwide a very big crisis situation. So now let us see the 2008 crisis. We'll change to month because it is easy to see. So probably if we use the Gann fan, we can understand it better, which is basically a Fibonacci. Pretty clear. So this is the halfway point where it could not take any support, so it fell off till 3x1 line. So let's try and measure and see how much time it took for market to fell. This is the lowest point. It fell by 64% in 307 days. And to remind you, this is absolute panic buying. People didn't have anything at all. So if we really look close into this is the actual duration of crisis. Markets fell by about 36% in 182 days, and then it was a gradual drop. Of course, this is also a very quick drop, but this is the panic drop. People literally had no time. They were just selling like crazy. So this was the situation of 2008 crisis. So now let us see the 2020, and probably keeping it in day will be more logical because it is easy to see how the recent trends are. This is the current situation of the 2020 crisis. Okay. So until now, markets have fallen in about 37% in 114 days. 114 days is, mind you, this is from more or less 18th February till today. So today, as I'm recording, it is 4th April. Have already fallen to about 47%, 37%. So now let us see how the world markets behaved in different situations, and let us come back and predict how much will the Nifty fall. How much could the Nifty fall, rather?
So as you have completely seen the Indian markets and how Indian markets reacted to all the things which had happened until today. So now let us see the international market. First we'll be seeing Dow Jones, and then we'll see how UK 100 had performed. So let me load the charts and show you.
Okay, so let us see how Dow Jones is. So let us see from 1991 itself. So this is where the 2008 market started to fall, and yeah. So here also it is the same story. Markets have fallen till about this line and took some support and started growing up. And if we take this to 2020, so probably we can say that markets are. Let us see how much. Let us see how much the markets fell. So markets fell by about 38% in the 60 days. So that is basically how Dow Jones performed in this time. So we are expecting it to fall 13,000 level or something, because I think that is where it should be expected.
Now let's see UK 100 and let's see how it performed.
So it shows the exact same pattern. The markets fell by around 50% and then took some grip and started coming up again. Then there was some resistance shown by the markets, and then again, and that resistance had continued at this resistance level. The markets have continued to grow, and suddenly 2020 crisis, and markets fell again. So this also is more or less the same situation right now. And if we just compare how much the markets fell in 2008 and 2020, it has fallen to about 50% in 518 days. Now, if we measure here, markets have fallen to about 37% in 151 days, and I think that is more or less exactly like the Indian and US markets.
That UK 100 had shown a very strong resistance pattern, and I think that is how the markets should be, and markets should grow at a certain rate and not exponentially. Or whatever we have seen until now were the repercussions of all the financial crisis. We don't have a recent history when markets had fallen drastically due to any of the health reasons or due to any of the other reasons other than economical reasons. The only two things which we had was swine flu, which didn't have a major effect, nor on Indian markets nor on international markets. And another thing was SARS. Even that didn't have a major impact. Yes, it had some amount of impact, but it was a very negligible impact in terms of 1 year growth. Everything got settled in 1 year. For this, we have taken an example of 1919 Spanish flu. First, let us see the impact of 1919 Spanish flu on DJI chart.
Okay, so now in this Dow Jones chart, let us just take a pitch fan and see how it will look if we start from here, and then this is the exact point of crisis, and yeah, let's see. Okay, so as you can see, it has fallen for a very big margin, right from 120 to its lowest point of about 63. So it has fallen about 50%. And now you can see that it broke this support level, it broke this support level, it also broke this support level, and it more or less we can say that it tried to take support here, but it could not, so it broke down, and then it had risen up. If we try to measure the whole fall, it comes to about 46% in 558 days.
Okay, so at that time in 1919, there were not a lot of markets. Probably I should not say that there were not a lot of markets. We can say that there were stock markets, but there were not indexes. So I struggled to find index. The only other thing which was S&P 500, but as we have already seen Dow Jones, I felt it was not necessary to compare that because more or less it will be on the same lines. So I tried to find out, and I found that Nike, which is of Japan, he actually had on the Wikipedia page of Nike, I had actually found that they did a back calculation of Nike from 1950 to a point where we could calculate that. I'll just load up that Wikipedia page and show you how it looks.
So this is the Wikipedia page of Nike 225. So Nike actually started in 1950, somewhere here. So you can see a close of 100 points. So this is actually back calculated till 1914. So if you look here, this is 50. In 1919, it had 53 points as according to back calculations. And in 1920 it had around 27 points, so that was change in percentage is minus 48%. So we can see that Nike also had a 48% drop.
Okay, so as you have seen, there is a very big change with almost double. So the only reason which I could find was from the overall population. In the United States, 500,000 people died, but the population of the United States was 100 million. And in Japan, the population was 50 million and still around 500,000 people had died. So that is what I could figure out why the reason of small change in markets. So we can say that even in this point of time, even if the number will not be so huge, number of deaths around the world will not be so huge, to conclude everything, we can say that Nifty might fall to a level of maybe 5,000 at some point of time in near future. Maybe it might take a year, maybe it might go through a lot of trends, but surely it might come down to a point around 5,000 points. And coming to Sensex, probably we are looking at range of 16,400 points. Probably that's where it should be. This is just by technical analysis, and I know that a lot of people don't understand technical analysis a lot, and people still think that technical analysis is just, or they think that it is not right. But yes, as we all know, what goes around comes around, and history repeats itself, and that is what technical analysis is based about. So yes, it surely works in some part of times. And I would like to ask you one question. I would like to tell you something. So the most important thing is people are not selling because they are in a panic. People are just selling because they are feeling that it will fall. Whenever there's a financial crisis, there is a panic sell-off. I don't think that what we are going through now is a panic sell-off. Unless 1 or 2 days on which we had panic sell-off, but other than that, it was not a panic sell-off as far as I can see it. At the end, I want to say that to all the investors, every recession is an opportunity. We should know when to take that opportunity and when to buy the right things. That's it. Thank you very much for watching.